Good afternoon, folks. Andrew Schartenberg here, your mortgage engineer. Today is Wednesday, February 9th, and I'm here with your rate report and home buyer tip of the day. Today we see rates pretty much unchanged. 30-year fixed, conventional Fannie Mae, Freddie Mac, perfect scenario loans, 0 points, are at 5.125. That should be the prevailing rate you see today. And then on government loans, the 30-year fixed FHA and VA rates, again, perfect scenarios, 0 points, you're looking at about 4.875% today. 10-year treasuries are down. The yield on them is down a little bit from the 3.71, 3.72% range we saw at the close of yesterday to about 3.66% today, though it is not sparking a decrease in mortgage rates. The reason that is down a little bit is from very strong demand from a treasury auction for 10-year treasury notes today, which is always a good thing. So we'll see what the economic data comes out with later this week. It's a very light week in the data department, so look for the stock market to really influence it. Also, just as an aside, the stock markets are kind of flat today. The Dow is just up about 39 points on the day. In the 12,200 range. So that's where the rates are today. Your home buyer tip of the day. Guys, you can knock quite a bit of interest and time off your mortgage by doing bi-weekly payments. There's a lot of mortgage programs out there when you refinance or buy a house that will automatically build that payment feature in for you with the bi-weekly option. Or you can just do it if you simply have a 30-year fixed mortgage or any kind of a mortgage right now and effectively turn it into a bi-weekly mortgage by making 2 payments a month versus 1. So basically the way that that works mathematically is if you make bi-weekly payments, that means that it's 52 weeks in a year. You make them every other week, so that's 26 payments, and 26 payments, 26 half payments equal 13 full payments throughout the course of the year. So effectively what you do is make 1 extra payment a year, and by making 1 extra payment a year, you're going to knock 5 years off the amortization period of your loan. So you'll pay off 5 years sooner and save yourself quite a bit of interest. Couple things to note though are if you do not have that automatically built into your payment features and you do want to go ahead and make extra mortgage payments, just be sure whether you're using an online payment system, using a payment coupon book, whatever the case may be, that you mark down any extra money that you're putting towards your payment every month to go to pay down the principal of the loan. If you don't clearly tell the bank that you want any extra to pay down the principal, they'll apply it ahead of time to your escrows or your interest, which certainly doesn't help you whatsoever. They're going to do it to maximize the amount that they're going to receive. So make sure that if you ever make extra payments, that you let them know to apply it to your principal balance as a reduction. Lastly, if you ever want to kind of play around with things and see what your savings will be by making extra payments, you can go on pretty much any mortgage calculator. If you go to my website, you go to www.otfunding.com. That's short for Oaktree. Again, www.otfunding.com. You can go to the mortgage calculators, and there's a great calculator tool on there that'll show you graphically when you'll pay off. A couple different ways it'll show you the amount of savings you'll make by making extra payments every year. So that's it for today, folks. We'll be back with your home buyer tip for the day and rate report tomorrow. Stay warm out there. The Northeast is freezing. Can't wait for the spring.